It's all about Omicron. Global markets stabilized at the beginning of the week after a sell-off triggered by a new COVID variant found in South Africa. A new virus contains more mutations to the spike protein and thus could have increased resistance to vaccines. The WHO deemed the new strain a variant of concern. The downside pressure eased after Biden said that lockdowns in response to the Omicron variant are currently off the table, while Moderna highlighted that new vaccine formulations could be ready by early 2022. At the same time, the company's CEO said that he expects existing vaccines to be less effective against the new variant. Late on Tuesday, U.S. stocks reversed early gains and tumbled after the Federal Reserve Chairman Jerome Powell said that the central bank will discuss speeding up the bond buying taper at the upcoming meeting due in 2 weeks. Also, the markets were again weighed by risks associated with the new COVID variant that has been found in more than a dozen countries now. Asian equities recovered from a one-year low on Wednesday to stage a technical bounce after a strong sell-off amid virus-related fears. China's Shanghai Composite edged 0.36% higher despite the data showing that the Caixin manufacturing PMI for November arrived at 49.9 versus 50.5 expected and 50.6 previously. In Japan, capital spending grew 1.2% year-on-year in the third quarter, pushing the Nikkei 225 0.72% higher. European stocks started the new month on a more positive footing, with the Pan-European Stock 600 adding 1.8%. On the data front, November's final manufacturing PMI reading for the Eurozone came in at 58.4 versus 58.3 in October and the 58.6 flash estimate. However, the sentiment deteriorated again on Wall Street after the Centers for Disease Control and Prevention confirmed the first case of Omicron in the U.S. Against this backdrop, travel stocks were the biggest losers, with American Airlines falling nearly 8% and United Airlines slipped 7.5%. The Dow Jones Industrial Average fell 1.34%, the S&P 500 lost nearly 1.2%, and the Nasdaq Composite dropped 1.8%. As for the market, November's IHS Markit manufacturing PMI came in at 58.3, lower than expected, while ADP's private payroll data showed 534,000 jobs being added last month, above expectations of 506,000. Now investor focus shifts to the key jobs report due on Friday. Meanwhile, currency markets have stabilized somewhat after a nervous start to the week. The dollar looks mixed versus major counterparts as traders struggle for direction amid lingering concerns over the new coronavirus variant and the prospects for early tapering by the Fed. The Euro-USD remains capped by the descending 20 DMA while staying mostly above the 1.1300 figure these days, lacking the upside impetus despite the lack of a pronounced demand for the greenback. In other markets, oil prices plunged dramatically last Friday and have been on the defensive since then. Brent crude dipped to April lows around $67.50 earlier in the week before bouncing marginally while struggling to regain the $70 figure. The market is pressured by worries that the Omicron variant of coronavirus could cut oil demand as global supply builds. Also on the negative side, the Energy Information Administration reported a gain of 4 million gasoline barrels in the week ending November 26th. Asian stock markets were higher on Thursday, but fears about the Omicron variant capped gains, with MSCI's broadest index of Asia-Pacific shares outside Japan advancing just 0.2%. Regional equities derived some support from a rise in Chinese real estate shares after reports that Chinese developers plan to sell a combined bonds in China to raise a combined $2.83 billion. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.